coached her through it on how to get this one collection taken off. Her credit score is going to be 800. So she's going from 640 to 800.
Wow.
Might be that's pretty close to the highs I've done, biggest I've done. 160. That's a lot. That's a big improvement.
Yeah.
So yeah, so that's you want to get those skeletons out right away. Let's take a look at that and get that resolved because it's amazing.
Yeah.
Personally, I mean, I know what I know about credit. You know, my credit score's in the 800s, but I get something in the mail from the city of Evanston. It said we're going to send your thing to collections if you don't pay this parking ticket. I'm like, what? What parking ticket?
Yeah.
You know, it's $25. I tell them, you know what? Whatever you need, I'll get it to you right away. You know?
I'm driving down there now.
Paying
cash.
So I'm like, I didn't get no parking ticket, but I don't care. I'll pay it. So, you know, whatever you do on any of those stuff, you know, question them after you pay it. Don't like, you know, some people are so hard-headed about that stuff. Like, you know what? To make a point, I'm not going to pay this. Wow, you just cost yourself a lot of money by not paying that $25 bill, whatever it is.
Yeah.
It's worth it, even though you know it's not right that they gave that to you or whatever. Pay it. That'd be my thing. So these things do show up, and you know, if you've had a couple addresses, people have a hard time getting in touch with you. These things do happen. Your budget, you want to make sure that you guard against being house rich and cash poor. Actually, I had a client yesterday. Usually I don't try to influence them that way, but I did yesterday. They were trying to get too much house. I was like, you know, this is going to be too much because they have another house that they own. They're buying this other one. It's actually about $100,000 more than what we had talked about. So they could probably buy it, but it's really going to stretch them. So I just hate to see that happen. I rarely do I ever say anything about that, but that I felt was a mistake on their part. So you have to kind of know. It's good to know kind of what kind of payment you're comfortable with, you know, because I'm gonna approve you for quite a bit. Actually, you're gonna see like that's fair, you know, and not as much as I used to, but you'll see that you'll probably be more than if you're renting right now. It'll be more than way more than what your rent is currently. So you have to kind of get a feel for what you feel comfortable with in your budget. So you have to go through that, and then when I'm approving you, I'm also considering your insurance, your assessments if you're buying a condo, your taxes. So when you're buying a condo or a house, always look at what the assessments and the taxes are. A lot of times that's greater than 50% of your payment. A lot of times it's the principal and interest that doesn't get you. It's the taxes and the assessments that get you. So look at that stuff when you're going through homes. So how much home can you afford? So these numbers, housing costs can be 35% of your gross. Actually, it can be more than that. It could be more than that. You know, like some people, they don't have any other debt. They have zero other debt. So I can get them approved up to 45% of their income, their gross income, should they not have any other debts. What determines this is just like the standard. What determines this is the underwriting system. When I run it through the underwriting system, it's taking into account how much money you have in reserve, job time, you know, credit history. It's taking all that into account, and that's what's determined on what you can be approved on. But the max right now, it was earlier, like 1 month earlier, it was 50%. 50% of your money could go out to pay for your new home, for all your debts. They recently scaled that back. Fannie Mae is at 45%, period. So if you're at 45.01, you're not approved. Freddie Mac is at 45.5 or lower. I've determined this through using both systems. They both have their own underwriting system that I use. And so usually if I have somebody at, and believe it or not, there's a lot of people at 45.03 or 0 or 34 or whatever. A lot of people in that ballpark. So I know right away I have to go to Freddie Mac with that particular client. And the way that works too is that, so Chase or Wells Fargo or whoever could service your loan, but it's either going to be a Fannie Mae or Freddie Mac loan, okay? But they're going to be the ones sending the statement to you. You won't know if it's a Freddie Mac or a Fannie Mae. That's totally invisible to you. You would, unless I did it directly through Fannie Mae or Freddie Mac, which I'm able to do, you won't know who's servicing your loan that way. Okay, so it doesn't really matter. So So housing plus long-term debt, not to exceed 45%, like I mentioned, of your gross monthly income. Long-term debt would include car payments, credit cards, student loans, anything like that. So basically, I'm just going to add those payments up. And if you have a student loan that's not in repayment yet, I still have to count that payment against you. Even though you're not making payments on it currently, we consider for something in the future.
Now, is there a certain loan period where you don't count it? Is it for loans greater than 3 years?
10 months.
Oh, 10
So if you have
months.
10 months or less on your payment, then we don't count that payment against you anymore.
Okay.
The automated underwriting system, what happens when I download your credit bureau into my system, it'll automatically let me know how many months you have left. And then when I run it through the underwriting system, it automatically eliminates those payments from your debt to income ratio.
Okay.
Works pretty smooth that way. Things that you're going to need to get approved. One, pay stubs, okay? Usually I ask for 2 most recent pay stubs, okay? And you're to date on that, most recent. W-2s, going to need your most recent year's W-2s and personal tax returns. Now the one thing to caveat there is on your tax return, sometimes people, they do like these little small businesses on the side and such, which is showing a loss on. So we actually get your tax return. We have to count that against you. So you're going to see that will actually subtract from your income as it pertains to your mortgage. Or if you do business expense, things like that. A lot of times people do business expense, and sometimes people do a lot of business expense, and it really dilutes their income. So we do keep track of that. The other thing that will happen is you'll sign a form when we're doing your loan, and it's a form basically allowing me to get your transcripts. Okay, so you have to sign that, and we get the last 2 years' transcripts from the IRS. So what we do is we look at those, compare it to your current tax return, make sure everything is the same. Or I don't. The underwriters are all over that stuff. If there's anything kind of odd in there, they'll make us research that further. Business tax returns, we get P&Ls. I don't know if any of you guys self-employed? No? Okay. Assets, things we're going to need there is your bank statements. Last 2 months is actually okay. And on the bank statements, if there's 5 pages on the bank statements, I need all 5 pages. Even if it says, nothing, purposely left blank, if you see a lot of times,
Yeah.
I need the purposely left blank sheet too. So you need all those sheets. And then payment books, statements for your outstanding liabilities, not so much. We're okay if we don't have that. Credit, as far as your credit, we do your credit report scoring. If there's a bankruptcy involved, I need information showing your discharge there. A lot of times they're going to ask for slow payment explanations on some things. Okay, not on all things. I'll let you know if we need that. If you're going through a divorce or separated, we need to document your child support or alimony, things like that. We'll need to get some sort of documentation on that as well. We'll need to do an appraisal. We need to get the signed real estate contract. A lot of times I just get that from Bert. Bert's office will send that over to me. If you're doing a VA, which none of you are doing, we need a certificate of eligibility just showing that you're eligible to get a VA loan. Okay, so credit score overview. A lot of times there's a lot of questions about credit scores and how that works. Okay, basic credit report is a record of your credit history. Okay, and a lot of things are involved in that. Now your credit score can go on credit scores that I pull between 350 to 850. 350 is hell, 850 is heaven. Okay, and everywhere in between is purgatory. So the highest score I've ever seen was probably like an 836, 840. 840. I think it was 840. This guy was old. Okay, long-term debt, no balance or very little balances. Okay, perfect. Everything was perfect. Boom. So that's like the best. Okay, the worst that I've ever seen is maybe like 419. I've never seen any in the threes. I mean, that person, every debt, bad. Collection, bankruptcy. They had the whole works going on. And they were applying for a mortgage. It's like, really?